Depleted, stretched, and disheartened. That's how a lot of home shoppers who've lost bid after bid this past year are feeling these days. On this video, we're bringing you an update on housing prices, housing inventory, and mortgage rates, since there are pretty big changes that have been happening. I'm also going to cover what the Federal Reserve meeting means and changes in interest rates. Let's jump right into the market report. Stay tuned. What's up, everybody? I'm Rob Wozner, a local realtor here in Southwest Florida. If this is your first time on my channel and you want to know everything about eating, sleeping, working, playing, and the real estate market, this is the channel you need to subscribe to. So make sure you hit the subscribe button and tap the bell so you're notified every time I drop a new video. And I have people from across the country and around the world reaching out to me every single day, and I absolutely love it. So if you're even thinking about making a move here to Southwest Florida, you need to take the first step. Give me a call, shoot me a text, send me an email, however you want to get in touch with me. I have the systems and processes dialed down to make this transaction as smooth and easy as possible. I have your back when buying or selling property in Southwest Florida. Home values have been rising through the pandemic, but they're starting to get a little ridiculous. In some U.S. cities, your home appreciation over the past year may be worth more than your annual salary. Appreciating home values have exceeded median salaries in 25 of the country's largest cities. Pandemic era remote working and large millennial demographic maturing into home buying age has created a huge demand for new homes in the country. But low supply of homes for sale means that homeowners are the ones calling the shots, increasing competition and driving up home prices. Sales of previously owned homes fell 7.2% month to month in February to a seasonally adjusted annualized rate of 6.02 million units, according to the National Association of Realtors. That significantly missed analytics expectations of 6.13 million units. Sales were 2.4% lower compared to the same month a year ago. Rising mortgage rates likely played a role in the underwhelming numbers. The sales count is based on closings, which means the homes likely went under sale contract in December and January. This is important to note, as mortgage rates were relatively low in December, with the average rate on the popular 30-year fixed loan hovering around 3.25%, according to the Mortgage News Daily. But that rate then began to rise steadily in January, reaching 3.68% by the end of the month. The rate is now considerably higher at around 4.5%. It will be very interesting to observe what's going to happen in the coming months as mortgage rates make a much more meaningful jump. While some of the sales figures were likely affected by rising rates, the bigger issue in the housing market today is very, very low supply. More homes came on the market in February compared with January. Tight supply and strong demand continue to push prices higher. Competition for the limited supply of homes for sale is increasingly fierce again. Homes are going under contract in just 18 days. Nationwide, 68.6% of home offers written faced a bidding war. So a few weeks ago, I put a video out about the housing market predictions from Zillow and Redfin. Well, here's an update from Redfin, and they just announced this on the 10th. So here's their new headline. The housing market is worked into a frenzy, unfazed by the war in Ukraine, a flattering stock market, and fast rising gas prices. Now, gas prices are a whole nother thing we can talk about, since I haven't seen gas prices this high in a very long time. I mean, the average price of gas here in Southwest Florida right now is about $4.25 a gallon for regular gas. So I'm not even going to go down the gas route. All right, let's get back to Redfin. They stated home buyers are in a frenzy. Buyers are reacting to changes in mortgage rates, but are so far unfazed by the war in Ukraine, the stock market volatility, and rising oil prices. However, these risks are reaching levels that could be dangerous for the economy, and the Fed is on the cusp of raising rates to cool further inflation. So let's talk about interest rates. I like to look at Mortgage News Daily for my information. Now, since Redfin printed this article and the Fed has increased rates for the first time since 2018, mortgage rates are based on the movement in the bond market. And as of the middle of this week, bonds have lost a good amount of ground every day for 8 straight days. With that, the average 30-year fixed rate officially hit its highest level in 3 years. That happened on the same day that the Federal Reserve hiked rates for the first time since 2018. But Is there a connection? The Fed's relationship with mortgage rates is quite interesting. The most popular misconception is the Fed rate hike means higher mortgage rates, but that's not exactly how it works. In fact, there are many examples of the Fed hiking rates only for mortgage rates to actually fall. Despite the paradoxical reality of the Fed, nonetheless has an extraordinary amount of influence over mortgage rates. One reason we don't see more immediate correlation is that mortgage rates move every day, whereas the Fed only meets to make rate decisions 8 times a year. The Fed also does a fairly good job of telegraphing probable rate changes. That gives the mortgage market ample time to adjust to changes in Fed policy before they actually happen. With mortgage rates having risen at the historically rapid pace of 1.25% in 2.5 months, we've certainly taken quite a few lumps destined for this particular bout of Fed policy tightening. Looking at the latest information, mortgage rates are currently at 4.46% on a 30-year fixed rate mortgage. Now, if we think back to August, and rates were around 2.75%, so that's almost a 2% increase from August, not even a full year. So on January 3rd of this year, rates were at 3.29%. So in a span of about 3.5 months, we have increased our mortgage rates by over 1%. We haven't seen rates this high since March of 2019. So basically, we are at 3-year highs right now in mortgage rates. All right, so let's talk about the Federal Reserve. They did meet and they approved their first interest rate hike in more than 3 years. They also see 6 more ahead. After keeping its benchmark interest rate anchored near zero since the beginning of the COVID pandemic, the policymaking Federal Open Market Committee said that it will raise rates by a 1/4 percentage point or 25 basis points. That will bring the rate now into range of a 1/4% to a 0.5%. The move will correspond with a hike of the prime rate and immediately send financing costs higher for many forms of consumer borrowing and credit. Fed officials indicated the rate increases will come with slower economic growth this year. Along with the initial rate hike of 25 basis points, the committee also penciled in increases at each of the 6 remaining meetings this year, pointing to a consensus funds rate of 1.9% by year's end. That is a full percentage point higher than indicated in December. The committee sees 3 more hikes in 2023 and then possibly none in 2024. And just to clarify, like I said before, the Fed does not directly control mortgage rates, as it manipulates short-term interest rates instead. Mortgage lenders take their cues from the bond market when settling the rates on loan products, including the yield on a 10-year treasury. But the upcoming weeks may be a volatile time for mortgage rates. Already, treasury yields have fallen as investors began to reassess the Fed's projections for future rate increases. Still, with inflation remaining very, very high, an upward climb in overall the course of the year is what is expected. So how precisely the increase in the federal rates will affect the housing market remains to be seen. Rising mortgage rates are no doubt a headwind for the housing demand. Let's go back to Redfin's market report, and they are reporting that the median home sale price was up 16% year over year to a record high of $369,125 and up 34% from the same time in 2020. In addition, the monthly mortgage payment on the median asking price of a home rose slightly to a record high of $2,048 and the current 3.85 mortgage rate. This was up 22% from 1 year earlier when mortgage rates were at 3.05% and up 33% from the same period in 2020 when rates were at 3.36%. Obviously, with interest rates now above 4%, we will once again be at an all-time high for monthly mortgage payments across the United States. New listings of homes for sale were down 1.4% from a year earlier. Compared to 2020, new listings were down 11%. Active listings, or the number of homes listed for sale at any point during the period, fell 24% year over year, dropping to an all-time low of 456,000. Listings were down 50% from the same period in 2020. 58% of homes that went under contract had an accepted offer within the first 2 weeks on the market, which is an all-time high. This was up from a 52% rate of a year earlier and 44% back in 2020. Okay, so here's a really good chart on Redfin's website showing how big the home price appreciation is. So at the beginning of the year, we were on track with the last 2 years where home sold prices started to trend down in the winter months like they normally do, and then trend upward in February. So if you look at 2020, home prices went up, and again in 2021. Now, if you look at 2022, you can see how much faster those sold prices are increasing. Now, I don't believe the housing appreciation is going to be sustainable. Home prices cannot increase indefinitely. So we'll have to see if this increase in the interest rates will slow it down, or if we have to wait and see if inventory increases and sellers will have more competition when selling their property, which may force prices to come down a little bit. Pending sales are up 3.4% year over year. This is pretty remarkable because, as I've been talking about month after month, we have a lack of housing supply and inventory levels at all-time historic low levels. So it's crazy to think that year over year, pending sales are still up 3.4%. Now, here in the Naples market, where everyone I think knows that where I sell real estate, this February we had 1,454 total pendings, and in February 2021, we were at 1,588 total pendings, which again is crazy because of the lack of inventory down here in Southwest Florida. Now, when we look at this chart, it's showing housing inventory is down 24% year over year. Just look at 2020, where we had close to 900,000 homes for sale in the US. And in 2021, it was 600,000, and now we're at 456,000, down 23.9% year over year. And again, here in Naples, Florida, in February, we had 1,427 homes for sale in all housing categories. In February 2021, we had 4,172 homes for sale, and back in February 2020, we had 7,137 properties. So that is over 6,000 property difference from 2020 to 2022 in the month of February alone. Because of this lack of supply, homes are selling at an incredibly fast pace. 58% of pending sales in the United States were under contract within 2 weeks. This is way below the past couple of years. Take a look at 2020 when the number was less than 45%, and now we're at 58%. So some perspective on this, that is 6 out of 10 houses that are put up for sale are under contract in 2 weeks or less. As you know, I sell a lot of real estate here in Southwest Florida. So let's take a look at the average days on market in Southwest Florida compared to the United States. Here in Southwest Florida, we have a whopping 6 days on market on average. That's 6 days on market. Back in February 2021, we were at 35 days. And in February 2020, we were at 63 days. So today we are at 6 days. 6 days from going on the market to being under contract. That is an incredibly fast rate. Zillow now predicts that the year-over-year rate of home price growth will hit 22% by May. That would of course represent an acceleration in home price growth. Annual home value growth is likely to continue accelerating through the spring. The robust long-term outlook is driven by the expectations for tight market conditions to persist, with demand for housing exceeding supply of available homes. The popular spring home buying season will remain competitive because the market is so short on listings right now and will continue to push prices even higher. But the affordability hits and already appear to be hurting demand and the margins. Mortgage applications declined in February, suggesting that many Americans may be waiting on the sidelines. As you can see, the real estate market is constantly evolving, and they're constantly updating and changing their predictions on what's going to happen. Mortgage rates, inventory, new builds, all kinds of things are continually affecting the real estate market. Thank you for watching my monthly real estate market update video. If you're even thinking about making a move here to Southwest Florida, you need to take the first step. Give me a call, shoot me a text, send me an email, however you want to get in touch with me. We have so many people calling us to help them, and we absolutely love it. I've developed the systems and processes to make this super easy and stress-free, and to give you the best experience possible. And remember, I have your back when buying or selling property in Southwest Florida, and I look forward to seeing you on my next video.